Hi traders, welcome to my channel. I am OT Josh. Now I did a call trade here. It is very obvious why I did this call trade. For those of you who have been following me without drawing this support and resistance line, you can see that we were coming from a downtrend. We are in a ranging market now, and like I told you, for those of you who have the ebook, you know what to do in a market like this. In a ranging market, you do your put trade at the support, at the resistance, and you do your call trades at the support level. It's a easy way to trade. So this is what I am just doing here. It is a very logical way to trade. From this side, you do your trade, okay, and from the upper side, you do your put trade. Okay, I'm going to take another AUD USD so that, okay, so now we'll do another call trade here. Why? Because we are still at we are still at the region of the, okay, let me do double trade. Yes, okay. Now, because we are still at the region of the support, this is going to pose a demand. Like for instance, we're in a 1 minute time frame. It's a support and a resistance in a 1 minute time frame, just a minor thing. But if you come to the 5 seconds, you see that this place here is a demand zone. As you can see, yeah, this is a demand zone. You see, when this is the 5 second, mind you, whenever price come here, you see this is a high demand zone. So this is why it's going up. You see demand and here supply. But coming back to the 1 minute, you just see a little consolidation zone. So this is how, okay, I missed this one because of the entry point, but definitely you see why I got it here. It was too far. So we'll go again to take another trade. You see, these are the kind of trade that you just do once and for all. It doesn't take much of your time. I If I was not explaining, I would have done another trade here. But nevertheless, this candlestick here shows that this candlestick is going to be green. Now, this wick here, you can see this wick. You see where it's rejecting from. If you look closely, this wick, this rejection is coming from this past resistance. There is a resistance here. As you can see, there is a resistance here. So this, you have to be careful now. You see there is a resistance here, and you see this candle that went up is coming from that same resistance. So you have to be careful because you might enter into a call trade now. Because of this selling pressure, this candle may close as a weak green or red candle, and you might be missing out on the entry point. What I'm going to do now is to wait for this. You see what I'm trying to say? Is to wait for this candlestick, because now you see this candlestick is showing selling pressure. Now it may be now that this market is about to break down. So for now, I'm not going to take any trade. So at this point, we need to understand what is actually going on. You see, it's going to break down, but we are still not going to take a put trade. Why? This is the first breakout, and the zone here is up to this point here. As you can see, this buying zone is up to this. So until this might be just be a fake breakout, we don't know. It might be a real breakout, we don't know. So we are going to see the reaction of the price in this place. This is how you understand price action. So let's just wait a little bit, and before then, if this is your first time, please like, share and subscribe to my channel. It's over 500 now. A big thank you to each and every one of you that has made this possible, from subscriber number 1 up to this point. So let's continue with our analysis. Let's see if this is a fake breakout. Okay, I think this is a real breakout. So okay, I will use the failure strategy now. What does the failure strategy entails? It says that since we have a level here, we are expecting from here buyers to come in. That's one. Now, at the same time, there is obvious selling pressure coming down within these two candlesticks. So we are going to wait for the buyers here to fail to come in, which obviously they are doing. Now, if they fail to come in, there are people who bought here already. I'm going to show you those. those traders who bought. Let me see if we find them at the 5-second chart. Okay, now at when the price came here, you see this doji, these are buying, you see buyers here, but they are too weak. You see, they are too weak. So when the failure happens, what is going to happen is that sellers now, since they know that buyers are weak here in the first instance, we are going to look at sellers coming in from here. So let me go back to the 1 minute. I hope you just understood what I explained. Okay, you see, so I'm going to do a put trade now. Now I'm going to do a put trade because we are expecting buyers to come in from here, but the buyers failed to come in from here. They came in from here. You see, they came in from here, not from here, because they tried. We saw it here. Going back to the 5 seconds, we saw how they came, but they were weak. But at this point, I'm still going to show you. At this point, the buyers were strong. They were really strong. As you can see, they were strong here. Going back to our 5 seconds, our 5-second chart once again, we are going to see what. Okay, look at the buyers now. You see how engulfing, hammer, they were strong here, but at this point they were weak. At the bottom point they were strong. So when price comes back to that weak point again, all we have to do is to put our trade there. Now you can come to the 5 seconds for confirmation. And what was the confirmation we saw? This hammer is a confirmation, these dojis, and then this engulfing. This is like a tower top. There is a pattern called a tower top. Yeah, this candlestick is the confirmation of the tower top. So with this, you can go in for 5 seconds and you have you can go in for 1 minute, which will be about 12 candles in the 5 seconds chart, and then you get your trade in the morning. So let me start from the beginning why we took this trade. This is our first trade. So I'm going to remove this line so that I can explain these things in a logical way. Now we have, this is our trade here, our first trade here. I'm going to take this. Now I'll do it like this, and then I'll explain why I took that trade. Now, what we had here was a downtrend, and after a downtrend, we do have ranging and then an uptrend, or we have a ranging and then a continuation of that downtrend. In this case, we have the continuation of the downtrend. So when we have a downtrend, a ranging like this, what normally happens is this: when the market is coming down like this, it went back up and it came back down. So here becomes a reference point, and this place where it went back up again becomes a reference point. So we can draw a line from here and here. So we have a resistance up here, a support here. What is support and resistance? There are areas in our chart where price move to and fro to find when they find equilibrium, the price move inside the support and resistance. When there is a disequilibrium, the price breaks out and tries to move to a specific direction. So this is what support and resistance is. So knowing that this is what support and resistance is, you should also know there is a strategy to take advantage of this, the support and resistance strategy. So when price comes to a resistance, you do a put trade, look for confirmation. And when it comes to a support, you do a call trade. That is why when the price came back here, I was able to do this call trade. And this is why I always tell you guys to get the ebook. The ebook is available. You're going to read about, like, this is the resistance here where you do your put trade, and this is the support below here where you do your call trade. This is the balance area. You can get your balance area when you see your balanced area, which is this, where support and resistance are starting to form. Then you know the equilibrium is balanced, and you can take advantage of the edges of this area. And so for the next trade, we got it here as well. This is the next trade here. Now I got this wrong. Yeah, the entry was wrong. I was supposed to do this trade at the support level, and you know at this support there is also a round number, but I re-entered again so that I could recover. And when this candlestick closed here, you can see as well do this trade. Now I'm going to tell you why you can do this trade. Where is it? Okay, this is the trade, right? Now if you look at this candlestick here, it is an indecision candle. Why? Because the lower wick and the upper wick, they are equal, so it's like a doji. This candle as well is a doji. But why am I doing a call trade? Look at the market sentiment. There is this round number here, and this is a support. So the pressure from here is much. This candlestick, we are not any candlestick indicating an uptrend, but only with the pressure, the support and resistance, and this round number, you know that there is no way the market is going apart from the upward side. That was why I did a call trade here, and I should have done another call trade here. And then for the last trade, I'm going to use the switch back to the 1 minute. Okay, here is the last trade here. So after this trade I saw this candlestick and the wick. You can see that this wick now is rejecting from a previous resistance, from a mini resistance that was formed, and so it shows selling pressure. This candlestick confirmed the selling. So this selling pressure led to this downtrend, and now at this downtrend something else occurred. We can see that there is a level here that is not visible now, but if you move to the left, you see the level being visible with this wick here. Now with this wick, we are expecting that when this candle comes down here, because of this level, buyers should come up, but the buyers came and buyers only entered from here. From here, sellers conquered. So this becomes the failure of buyers to enter. We have only two participants in the market, buyers and sellers. If buyers fail to enter at a level where they were supposed to enter, it means that they are not strong there. So I went with the put trade here, and that was the result. And as you can see, because of the effect of buyers not being able to enter here, the price has to come back down to look for the next place where buyers will be strong enough. And from here, there is a round number here to buyers came in. But look at this candle, is a doji candle, a kind of indecision candle. So buyers are only strong at this level here. They are only strong at that level, and maybe they are also strong at the opening price of this level here, but from here they were not strong. So let's see what happens. Okay, again here buyers not strong. So when this candle gets a rejection, this is not strong buyers, so most probably this candlestick will be a downward pressure candle, and the downtrend is going to continue. So like I told you, if you have not do where to get this ebook, you're going to benefit greatly from it. It costs nothing. There is no price that is too big for your knowledge. And if you want, you can also join the Telegram Signal group. It is absolutely free. So if you want to join them, you can contact me with the WhatsApp address at the description of this video and every other video. So until next time, bye bye.